It's Wednesday and you're watching FreightWaves Now. I'm your host, Anthony Smith, and coming up we have Luke Falasca talking to the brokers. We also have a special update from the legendary John Kingston himself, but first a word from Zach Strickland with a carrier update brought to you by PowerFleet. Stay tuned.
Hey everyone, and welcome to your carrier update presented by PowerFleet. I'm Zach Strickland, and we are going to talk about tender rejections all day today because that's what's important in January, is figuring out which markets, which areas of the country are having the most destabilization. So what I mean by that is anytime that we are in a low volume, a declining market environment, is that we need to identify the areas where you're going to have the highest percentage opportunity for increasing freight chances. So when carriers are rejecting freight in certain parts of the country, that means that they are going down the line in their route guides looking for somewhere to find freight. And right now, we are declining significantly on our outbound tender rejection index, 6.23% overall, but van rejection rates under 6% for the month right now. So we knew this was going to happen. Didn't know if it was going to happen this rapidly or not, but we had a little stall out point right here, but it has started to finally settle back down as we enter the end of January and start February. Nothing to be too concerned about, 14.86% on the reefer side, holding a little bit stickier than the van demand overall. So looking at the market itself, we're looking for these dark blue markets on the weighted rejection index map. We need to find the ones where you're going to have the highest opportunity along with volume to get those increasing chances on the spot market. Your contracted freight, mostly about 95% acceptance rates right now, but the market is still figuring out where it needs to be in terms of everybody coming back online from that Christmas holiday where the drivers went to their areas of the country, went home for a little while, took vacations. Some of them were even on furlough for a little bit because this is the lower volume time of the year. And it does take them time to figure out where they need to be and get these markets in balance because, as we all know, freight moves freight, and if you're not moving, that means you're not getting into position where you need to be. So any of these darker blue markets are areas of interest for any carrier out there. We've got Savannah, Green Bay, Hutchinson, Kansas, for instance. We just had a big winter weather event coming through the middle part of the country right here in Kansas. And let's take a look at that real quick. So Hutchinson, Kansas, tender rejection rates moving up about 8.63%. This is important to know because the rest of the market is in decline. And yesterday we had a big amount of snow coming through that area, and it did create a lot of disruption. 8.83%, I should say, for the tender rejection rate, and it is moving up. Historically, too, over the last several months, it has had a lot more activity here in the most recent time. So if you are operating in this area, it is a good area potentially to look on the spot board and check out to see what's going on. Some of the tweener rejection rate is the one that's going up, so this is going to be some higher higher mileage freight moving across the country, 450 to 800 mile freight that is seeing 14.5% tender rejection rate. Another market to watch, the Savannah market. So Savannah, a big port city, the tender rejection rate's not quite as robust out here. 3.78% tender rejection rate, very calm. You've got a 96% acceptance rate down there, but it is moving up, and that is important because it's moving the opposite direction of where you would consider it being for a stable environment. Now, one of the reasons for this is probably due to the port activity, which I'll show you in just a second, but local rejection rates driving this market, which means that you're going to go from 0 to 100 miles, basically driving it from the port to the DC or the warehouse, wherever you're going, more than likely hopping on the rail as well. So a lot more activity around the Savannah market. But if you're looking right here at the customs import shipments, we have had significant spikes in inbound customs coming through the Savannah port right now. I've got the rail volumes on there as well as the trucking volumes, and you can see that they do follow this pattern of spiking volume here over the last couple of weeks. So again, if you're operating in the Savannah market, you may have a little bit more increased chance of finding freight today or the next few days. And that'll do it for today's carrier update.
The comprehensive logistics offerings from PowerFleet cover in-cab ELD, fleet management, trailer tracking, cargo monitoring, and tracking other assets such as chassis and intermodal containers. Power up your operations with PowerFleet.
Hi everyone, I'm Luke and I'm bringing you another broker update for today. All right, let's go ahead and just dive right in. So we've got here on this chart behind me in blue is the dry van volume levels in the United States, but we're not looking at the index levels like we typically do. We've kind of changed views here a little bit. So you'll notice all the way over here you see the 1% mark. What that means is like over the last year, so since 1 year ago is how we're looking at this chart, there has been a 1% increase in volume. So hooray, the market is spiking, right? Now, that's not much. That's pretty much flat, no real growth, and we can see that we've really come off any type of growth that we've had since the first kind of push in the beginning of the year. That being said, the orange line behind me is reefer volume levels. They are up 15% year over year. That's a massive increase. That's fantastic. So that's a really good sign for anybody moving reefer freight right now. It's a perfect opportunity to really start to look for opportunities in the reefer market. If you're low on freight this time of year, it's not a time of year when people move a lot of freight. Typically that's summertime. So if you're looking to gain a few customers, I look for reefer customers, especially as you continue to see that number increase. They're going to need help moving their freight. Why not you? Let's go ahead and look at the call map before we dive into some specific markets. So right here on this call map, this is our weighted rejection index. Don't get excited. You see a lot of blue, which typically signifies growth, and red typically signifies contracting markets. So traditionally, the way we look at this is any blue markets, you're going to want to call for potential customers as they might be having some trouble getting their freight covered. However, if you look at the index all the way down here on the bottom, the highest number is 1.2 on the index scale. Nothing to get excited about when the number all the way on the bottom is just under 8 or -8. So until you start to see that number in blue get into the high single digits or the low double digits, that's when you get excited. Until that time, nothing to get excited about. That being said, if you are looking to make some sales calls today and want a little direction, might focus in the middle of the country. Kansas looks like it has a little something. Maybe over here in Oregon as well, and Northern California, potentially even Phoenix. Generally, Phoenix isn't that much of like a strong market. It's typically a backhaul market. However, you might have a little luck today as it is experiencing slight tightening. And then also northern Wisconsin. Outside of that, just kind of stick to whatever normal routines you do. Not a lot happening today. Pretty flat. However, for reefer markets, we're going to go ahead and take a look at the Omaha, Nebraska market. It's not the largest reefer market in the country, but probably about a top 15 in terms of volume levels. So what's interesting here, the blue line behind me, you'll see a massive spike in the volume levels out of Omaha in terms of reefer. So this is reefer volume level. See that nice little spike there? We're hitting a year-to-date high just about. That's a good sign. So if you have customers in that market, feel free to pick up the phone, call them. There's a lot of extra freight to be moved. Or if you don't, just start calling this market and you might have a little luck today if any shippers do need help moving their reefer freight. Now this green line here is tender rejections. We notice we've really come off this big spike here since the holiday. We kind of hit down here. We're sitting right about almost 15%, so that's just below the national average, but it's still continuing down, so you can be fairly aggressive on your pricing, push carrier rates down to create margins, and you should see some pretty good luck. I'm Luke. That'll do it for your broker update for today, and also apologies to our host, Anthony Smith, for stealing his longboard this morning. Otherwise, have a great Wednesday.
Make sure to tune in to FreightWaves TV this Friday as we discuss the current and future state of freight. The FreightWaves research team has compiled the 2020 FreightWaves Freight Outlook, designed to give you an upper hand in an ever-changing industry. You'll hear in-depth analysis from FreightWaves CEO and founder Craig Fuller, head of research Kevin Hill, and so many more of our freight market experts. We'll also be taking live calls with any questions you may have for 2020. Tune in to the FreightWaves 2020 Freight Outlook this Friday at 2 p.m. following What the Truck.
Hey everyone, I am here with our resident oil market guru aficionado, John Kingston, because we have a whole ton of oil data coming into SONAR this week. John, What do we got going on here? We got a ton of tickers coming in, brand new stuff. Can you tell us a little bit about what it is?
Well, it's exciting. It's an exciting new relationship between FreightWaves and S&P Global Platts. Full disclosure, I worked at S&P Global Platts for almost 30 years.
Right.
Of course, diesel is the lifeblood of the trucking industry, not just trucking industry, the transport industry in general. One thing we've been trying to get into SONAR is as much diesel information as possible. So what we've done is we've struck an arrangement with Platts where we're going to be able to show the differential between various diesel products and the price of dated Brent, which is the world crude benchmark. So you're not going to get the Platts prices, which are really benchmarks,
right,
in SONAR. If you want that, you got to call Platts and be subscribed to that.
For sure.
But what we're going to do is we're going to show the strength of diesel relative to the strength of crude. There are really two things that go into the price of diesel. First is, what's the price of crude? Is it up? Is it down? Whatever. But how strong or weak is diesel relative to crude? That's what this series is going to show. So this is a really exciting addition. So what we've got here, for example, is the price of ultra-low sulfur diesel in New York Harbor compared to the price of Platts dated Brent, normalized to dollars per barrel. So what this means is that $12.89, a barrel of diesel in New York Harbor was worth $12.89 more than the price of dated Brent, and you can see it moves. I mean, look what's happened. Right into the new year, it was up over 18. So
right,
that's a significant move. We're going to track those.
So what is it? I see that we're basically tracking the spread or the difference between the two numbers. What does it mean when the price or the spread gets bigger?
Well, it could mean a lot of things, but basically it means that diesel will be getting more expensive relative to the overall oil market. So, an upward move, I mean, it's theoretically possible to have an upward move in this spread and a downward move in overall, like
correct,
if crude collapses,
right,
but diesel stays up, then this could move up even as the price moves down. So it's going to give you that sort of second level understanding of what's going on in diesel markets. Now, let me point to another, this is a very similar type of chart. Group 3 is an area in the Midwest, Missouri, Oklahoma, right, and Kansas, and this is the price of ultra-low sulfur diesel in Group 3 compared to Brent. So kind of like the same sort of motion. It's been very weak recently, coming off a lot of highs. Here's one of the things that really spurred us to do this. I know IMO 2020 has been discussed a long time.
Right.
It's already law of the world. It's begun. Everybody's saying, well, what happened? We thought it was going to be a lot, big movement in diesel prices. Right. I'm here to tell you that for the last day or so, I've been talking to a lot of analysts, people I've known a long time. They don't think it's over. They
right,
think that there was steps taken to ease the transition by a lot of companies. They do not think that any significant movement in diesel as a result of IMO 2020 is off the table. They see it happening. So that's one of the reasons we wanted to do this series, because
sure,
if you start to see diesel blow out against crude because of IMO 2020 finally kicking in, you're going to see it in charts like this.
And you're going to see it first, because
you're going to see it first,
be
exactly,
the underlying cause for the price to go up or down.
Right, and
yeah,
so here we have the same kind of chart, but this is in Los Angeles. California's oil market has always been like on a different planet. Right. But you can see it has a very different shape than the other two we just looked at. So, and it also, the spread is a lot bigger because diesel out there is always more expensive because of environmental regulations.
For sure.
So, mind you, this is not just going to be diesel prices. This is jet fuel prices. Remember, jet is
right,
obviously jet is used by airlines, but it's also a distillate like diesel.
It takes away from the same
exactly.
bank. Yeah.
Bunker fuel, which
yep,
is being displaced from IMO 2020.
Right.
But am I going to put a scrubber on a ship? Well, what's the price of high sulfur bunker fuel? These relationships are all complex. I've been working on the release notes for this in great detail. Right. I assure you the information will be there. So anyway, a really exciting partnership between FreightWaves and S&P Global Platts.
So basically, this is going to be the underlying rumblings of anything that's about to present itself onto the diesel market.
I like that term, underlying rumblings. We're going to have a lot of rumblings.
All right. So
seriously, if you watch this, if you're already the type of company that's really closely watching diesel data, this is going to give you a whole other level of it.
Very good stuff. So if anybody has any more questions about what this data is, where it comes from, what it means, certainly get in touch with John.
J. Kingston at FreightWaves.com.
Or check us out on FreightWaves.com, and you can find all of our articles and release notes on the website.
And that's going to do for this Wednesday edition of FreightWaves Now. Thank you so much for tuning in. The content doesn't stop here. We're always posting around the clock, so check us out on your favorite social media platforms. And check out our FreightWaves TV app on all your favorite streaming platforms as well, including Apple TV, And Android users, we haven't forgotten about you either. Thank you so much for tuning in, and we'll see you on the next episode.